Good morning, traders. Welcome to the Elliott Wave Street Wave Count Update. It's a pleasure to start the week with some of our wave counts and trading plans. We are going to check the S&P, the bonds, and the euro. And here is our website before we start with the live market analysis. Under the membership tab, you are going to find our monthly plans to sign up and get access to a fantastic Elliott Wave world of possibilities of analysis. We cover all these instruments on a daily basis with a daily video with trading plans and also with education. So you can sign up right away here on the website and get your first month trial. All right, let's start with the analysis on the S&P. We have been working with the plan of finding the end of wave 4 at this area. So here we have price today testing the 100 area after hitting the previous low. We are seeing price rejecting that low. So the plan is to find the bottom of the market this week on the S&P. I'm looking to see the bounce and start having the first reactionary wave 1 after hitting this low. So there is a big chance that this could be the bottom on the S&P. If we check the lower time frames, like the hourly chart, we're starting to see some rejection at the market lows, and this is pretty interesting because a price show this leg, and there is something that we talk about in the membership as well, is about price action. When the market is moving down, you don't know where. It's impossible to tell where the market is going to finish, right? There is no way. This is actually pretty random because the institutions are buying, are providing liquidity. So eventually demand starts showing up, let's say, in a bigger way than the one that we were seeing before. If we compare these legs here, this one with this one, clearly this one is bigger. So let's do this exercise with the S&P. So we have this leg, and clearly the biggest leg is this one. So from here is where we are seeing that the institutions are jumping into the market. So one of the trading plans that we manage here is to look for a lower low, and at the rejection of those lows is where we can start building a position. Of course, once the wave count is complete. So an aggressive entry could start happening here at the rejection, right? Let's say that we have a nice a demand happening here. So that's going to be entry number 1. And entry number 2 is going to be after the first 5 wave sequence, and then after the 3 wave sequence down, we can go long here as well. So there are 2 places with Elliott wave where we can trigger. One is the aggressive, trying to catch the end of the move, but with some guidelines and some rules before. This is something that we talk on the membership before we jump into the market, because there are so many details that we should check in order to find those entries. Let's have a look at the bond, at the 10-year bond. The 10-year bond has been moving down. It's heading to make a lower low, and if it bounces from there, it could be interesting to go long. We went long here at this area, and here could be another opportunity, of course, with a nice distance to book some profits. But look, there is something inside the bond market that is extremely useful. We don't have enough time here to cover all these important key points, but of course this is something that we cover daily. And look, in general terms, the 10-year yield is the blue line. The 2-year yield is the orange line. The green line is the curve, that is the difference between the 10 and the 2. And the red line is the S&P, right? So look where the curve reverse around October, November, last year when we start seeing high CPIs. The curve started to move down while the S&P continued moving higher. This difference of value were warning that the S&P was in trouble. And we have the leg down on the S&P, that is a red line, right? Once we got this low here on the S&P, the S&P started to bounce, but look, we have the curve moving lower. We didn't have a reversal on the curve. So this value here was telling that something was not right, and the S&P moves down. Now the S&P today is at a market extreme, right? It's at a market extreme. So we were here at the beginning of the year, and now we're here. So the question is the S&P going to turn around and start to building an impulse, or is going to collapse? And the answer is coming from the curve. The curve is the green line, and I'm thinking this is 1, probably this is 2 or a little bit lower, that's fine. But if the curve starts trending to the upside and the S&P remains near the lows, let's say, or we can start going aggressively adding to the first position, whatever, with the analysis that we just did with those entry points, that's where we are going to have a golden trade. Because imagine the curve is starting to move up and the S&P building the position, doing an accumulation at the market lows. We are going to have the S&P then moving back to the 800 area, to the beginning of the year area, and this could be the beginning, right? So I know that it's a lot, but you can learn this with us on the membership. This is something that I cover on a daily basis. I talk about these bond yields and the curve and everything on a daily basis inside the membership. So clearly, that's something that you can get access to. All right. So let's talk about here the euro. The euro has been moving down. All the risky assets like the euro, like the Bitcoin, like the Aussie, the New Zealand, the stocks, right? All the assets against the USD have been in trouble because clearly there has been fear in the world because all the things that are going on, and the big guys were cashing their investments. So a lot of USDs, right? And that's why we have been seeing falling the euro strongly, the S&P, gold, silver, like everything against the US dollar has been in trouble. But for the first time, we are seeing this leg on the euro. So it's the first time that we are seeing a big effort. It is the first time that we are seeing the institutions doing something. Is the first time that we are seeing the institutions getting into the market, right? So that means that there are two trading plans here. The first one is if the euro is able to make a high here, we are going to have a leading diagonal wave. Yes, wave 4 moving inside wave 1 is a leading diagonal wave, and it's valid when it shows up in wave 1 or wave 5. And after that, we can look for a 3-wave sequence, and we're talking here about the swing, and here is going to be the entry, right? And the other option is looking for the price. If the price only makes 3, because we don't know if it's going to build 5. So let's say that here the price goes down and test this area and bounces, that's going to be the entry. So one or the other. If we have 3, the price moves down and rejects, and we go long. If we have 5 and then 3 down, we go long right here. So one or the other, right? But it seems that we are in a nice area on the S&P. Also on the euro starting to reverse. So it's a matter of waiting for the ideal setup right now. All right, traders, so that's the plan for this week. we have this fantastic membership on elliottwavestreet.com/membership, where you can get immediate access to this Elliott wave analysis with insights on the currencies, the stocks, and the futures. We cover the S&P on a daily basis as well. And you can access your trial directly here from the website. If you have questions, let us know. Have a fantastic trading week. I'll see you soon. Take care. Bye-bye.